rebalancing your portfolio. Now, it's something that most seasoned investors hear about, but in my experience as an advisor, most people don't do it. But it's something you really should be doing to keep your investments aligned to best achieve your goals, reduce your risks, and maximize your returns. And everybody wants to do that, right? Now, you can rebalance your portfolio anytime during the year, but it's always good to get a reminder in December because you can take advantage of any tax loss harvesting before the end of the year. Over time, your portfolio will naturally drift as some investments outperform others. Now, that means your carefully allocated 60-40 portfolio can easily shift to a 70-30 after a strong year for stocks, and there have been a lot of very strong years for stocks lately. But while that's good, it also means more risk than you intended. Rebalancing realigns your portfolio to your goals. It also reduces volatility and keeps you in control of your risk exposure even as the market moves. Now, December is a great time to rebalance because you can combine it with tax loss harvesting. Selling underperforming investments lets you offset gains elsewhere, potentially lowering your tax bill. And I know 2023 and 2024 were strong market years, so it may not seem like there are a lot of opportunities to harvest losses, but there are some. Here's a list that Morningstar compiled of some individual stocks with losses, and some ETFs and mutual funds with losses. So, for example, you could sell the ARK Innovation ETF, which is down over the past 3 years, and replace it with the Goldman Sachs Innovate ETF. Now, that's just an example. There are plenty of other tech innovation ETFs you could use instead of ARK. And you can see how that would apply to other categories of ETFs. Now, selling a losing stock or ETF and reinvesting in a similar option helps maintain your strategy while locking in tax benefits. Here's some data from a Vanguard study showing that it's usually not necessary to rebalance more than annually. Over nearly a century, portfolios rebalanced on a yearly basis performed just as well as those rebalanced monthly or quarterly, but with far fewer transaction costs. Rebalancing less often reduces turnover and trading fees, letting you keep more of your returns, and a December rebalance sets up your portfolio for the year ahead. Now, here's an important point. Rebalancing is not about timing the market. It's about staying disciplined, keeping your portfolio aligned to achieve your financial goals while mitigating your risk. Thank you for watching today. Don't forget to like and subscribe to help me spread this message to other investors.